What is going on, traders? Have you guys seen the VIX lately? The VIX is back at a level that we last saw in January 2022. And just to be clear, January 2022, that was the start of the bear market. That was the absolute top of the market. So for you newbies, I'm going to explain a little bit what the VIX is, so don't worry about that. However, it is very important to know where we are on the VIX. What does this mean for the market? I'm sure a lot of you traders are looking at the VIX. Just from what I track on YouTube and on Twitter, a lot of traders are looking at the VIX like, what the hell is going on? How can the VIX be this low when there are so many uncertainties in the market? We don't really know what the extent of the Fed rate hikes are. We don't know what the extent of inflation is. We don't even know what the extent of a potential recession is, right? The yield curves are still inverted up the wazoo. So there is a lot there are a lot of unknowns. However, I will talk about additionally one thing that we must know, and that is VIX manipulation. Now, a lot of you talk about manipulation, or I'm not going to point at you. A lot of people online, especially on FinTwit, Twitter, financial Twitter, talk about manipulation as sort of this big bad thing that lurks in the shadows, kind of like a boogeyman, but there isn't usually a lot of evidence to claims of manipulation. Also, people use manipulation as an excuse when their trades are going against them. However, there is an actual history of VIX manipulation. VIX is actually one of the most manipulated derivatives historically, and there has been a ton of actual journalism in the past that has gone into detailing VIX manipulation and how it is possibly done, and how some firms are actually banking billions of dollars off of VIX manipulation. But as always, when we talk about manipulation, what's going on, the phenomenon that's going on, the VIX being this low, cannot be chalked up entirely to manipulation. So it is part of the story for sure, and we will get into that as well. But it is not the entirety of the story. What I think is going on is that the market is getting a bit complacent here. But I will talk about why that is as well. So in this video, I'm going to talk about the VIX, why it is back at levels that we've only seen, or that we've last seen in January 2022. We're going to get into the VIX manipulation. I'm going to show you a recorded history of VIX manipulation and the stories that have been released about VIX manipulation and who has made money off of VIX manipulation, and how that can be a part of the reason why the VIX is here at the moment. But also, we will get into whether there is an opportunity here. Does this spell disaster for the upcoming market? If we're at a level that we last saw when the entire bear market started, does that mean that now the market is likely to drop, especially with earnings on the horizon? As of the time of this recording, we still have another potential rate hike. We don't know when or if we're going to fall into a recession. So without further ado, let's get started. So as I said, the VIX is back at a level that we last saw January 2022. Now, if this was a secular bull market, and just for brevity's sake, a secular bull market can be defined as one that lasts for multiple years due to a number of market forces, right? So if this was after 2010, where we had an insane 10, 11-year bull market, or if this was even after the drop of 2020, the pandemic drop of 2020, I wouldn't really care what the VIX is doing. But where the VIX is right now, this is an extremely interesting phenomenon here. So real quick for newbies, what is the VIX? The VIX is basically just an index that tracks the implied volatility based on a range of SPX options, S&P 500 options. So when there's expected implied volatility, or when there's implied volatility that is expected to be higher, then the VIX goes up. Now, how is implied volatility calculated? Implied volatility is derived by the supply and demand of the options themselves, the SPX options in this case, as well as the expected range of the S&P 500, the expected price of the underlying, right? So how many contracts, for instance, are traded out of the money, both above above the call side and below the put side. So a VIX of 16, basically the same as what we saw back in January 2022 implies that the market really isn't expecting a lot of volatility for the S&P 500. Now, that doesn't really come as a surprise to me. As I said in the Academy earlier this morning, here's what I wrote about the VIX. I said there isn't an apparent reason to be overly bearish yet. That's probably why. Plus, VIX manipulation is a real thing, something which I will talk about, which you definitely want to stick around for because it isn't just speculation. There is a lot of evidence and journalistic integrity that went into uncovering VIX manipulation. And what I mean by there isn't a reason to be overly bearish yet is because we know the extent of, we can surmise the extent of the Fed rate hikes. We know that they will hike at least one more time in May, right? But now we are getting to a point where the Fed funds rate is rivaling what we are seeing in the CPI. And they will likely hike one more time, maybe two more times, and then pause. The point is that the end of the rate hikes is likely near. However, we don't know how long they will hold those rate hikes for. We know that CPI is dropping, even though core CPI isn't. But CPI is dropping like a rock. Unemployment is still historically low. And we haven't really seen the earnings compression that we thought we would see by Q1 or Q2 of 2023. Now, Q1, we haven't seen it. Q2 is going to be reported in the next few weeks as of the time of this recording. As a matter of fact, we do have Netflix and Tesla reporting this week. And also the bank runs, right? The Fed came in and bailed out, backstopped basically the banks and ensured that we wouldn't have any bank runs and we wouldn't have any bank failures or lost deposits. So when you think about it, what is the real reason to be bearish on the market currently? And I just don't see an apparent one, and neither does the stock market in the current time. However, in my view, I think we will get a rise in the VIX if the following happens. Surprise negative earnings outlook. As I said, the next couple of weeks will be jam-packed with earnings, and we will have earnings plays on some of those as well. Spike in unemployment, right? Which we tend to see before recessions, which hasn't happened yet. But if you watch my video from yesterday, has to happen if we are going to get that sticky services inflation down, because that is tied to wage growth. Spike in CPI, which would be unexpected, bigger than expected rate hikes. If the Fed comes in and raises 50 instead of 25, or if they continue to raise 25, 25, 25, where the market thought that they might stop after the next 25 rate hike. Or more importantly, because this is one that we absolutely cannot see, is a major unforeseen credit event caused by rate hikes. So, we're always talking about some potential failures that are apparent, whether right now the conversation is surrounding bank runs because we've seen actual bank runs on two small regional banks, or we talk about potential slowdown in housing, and that could be the precursor to the next recession. Recessions, when they are derived from an increase in interest rates, they usually occur because of an unforeseen credit risk, whether it's in corporate credit, whether it's in commercial real estate. It's just something that we cannot measure or detect now, but that the increase in rate hikes and holding higher for longer will eventually crack the system and uncover these things and bring them to the surface. And by the way, if you guys want access to all of my analysis, if you want to chat with me on a daily basis, as well as the rest of the analysts in the group, you want access to all of our alerts. We had a fire-ass day trade this morning. I actually opened it the first 10 minutes of the market. It was a short on the S&P 500 futures after that spike in the morning. Be sure to check out the link in the description. We did release a lower price monthly option that doesn't include the mastermind Zoom calls and that doesn't include the day trading course or the options course. However, you will get access to the alerts as well as the chat. If you want access to the comprehensive academy, then be sure to make an appointment. Click the link, make an appointment with one of our ambassadors and apply to the academy, and they will let you know right away if you are approved. Now let's talk about VIX manipulation. So back in 2019, there was actually a K Street law firm. K Street is basically the street where all the lobbyists and law firms are in Washington, D.C. But a K Street law firm called Zuckerman Law, they wrote to the SEC as well as the CFTC, and they said that there was a whistleblower who basically uncovered that he or she had held senior positions at some of the largest investment firms in the world, and they uncovered what is later to be known as VIX manipulation. Here it says the manipulation, according to the letter, is ongoing and costs investors hundreds of millions of dollars each month, or $2 billion per year. The scheme allegedly exploits a flaw in the VIX, which allows traders to influence the index without risking any capital, simply by posting S&P options quotes. The profits from this activity amount to multiple billions, according to the letter. It goes on to say the law firm therefore alleges a breach of fiduciary responsibility on the part of the CBOE Global Markets Inc., which the letter says earns 20 to 25% of its revenues from the VIX. That is an insane amount of money. They earn a quarter of their entire revenues just from the VIX. More shockingly, this is not the first time. In 2017, John Grisham, that guy used to write law novels. John Griffin and Amin Shams of the University of Texas at Austin detailed interesting patterns in trading related to the VIX. So basically what they're alleging is this, that if you're willing to get your hands dirty to ensure a profit, you can submit aggressive buy orders for the S&P 500 options. Remember, the VIX derives its value off of S&P 500 options during the pre-open auction period, 7:30 to 8:15 a.m. Central Time. This would be 8:30 to 9:15 a.m. New York time, so still before market open, driving up the index options clearing prices, and with them the VIX. Now, I will leave a link to this article in the description of the video because it is very interesting for you guys to read this and track. And as I said at the outset, that VIX manipulation, VIX suppression, whatever you want to call it, cannot account for the entirety of what's going on in the VIX. Yes, I do think that the VIX is manipulated based on the studies that I've read, but I do think that the manipulation happens on an intraday basis, right? It's more of a day trading manipulation. In this case, I do think that the market is becoming a bit complacent, and I don't think that it's really unfounded. As I mentioned earlier in the Academy as well as on this video, I do think that there isn't an apparent reason that the market sees right now for being overly bearish. They need to see something to be overly bearish. And since we are upon earnings season right now, that could be one of the things that drives the VIX back up and drives the market back down. However, if we get a good earnings season, Netflix, Tesla, Microsoft, all of these companies report good earnings and say, hey, what recession? We don't see any slowdown upcoming. Then the VIX could drop back down to its range-bound lows that we saw in 2021 during the bull market, where we were routinely trading between 13 and 15. Right now, we're at 16 and a half. So it really depends on some of these things that are upcoming that I outlined earlier in the video. And if we take a look at the VIX calls, you could see that now, at least derivatives traders, the stock market, it seems like the stock market is complacent, but derivatives traders right now are betting that the VIX goes up. So we are seeing, if we take this to 6 months out, most of the VIX bets are in calls. Now, it doesn't mean that this is an indication of what the VIX will do, but it means that there are derivatives traders and institutions that are also wary of a complacent stock market and are hedging using the low cost of the VIX right now, because the VIX is historically low. We haven't seen it this low since back in January 2022, the all-time high in the US stock market history. Now, if we filter this and go to just, 1 month out from the time of this recording, you could see that actually most bettors are betting that the VIX drops further. But this changes once you go 6 months out. 6 months out, most of the bet, and we're talking about insane premium, right? Like millions of dollars of premium put into VIX calls, and that we don't have the highest number of premium for VIX puts is 300K, and that is for one that expires very close to the time of this recording. But anything that goes out to June, July, August is in the form of VIX calls, meaning that investors and traders are betting that the VIX goes up. And you know what? I mean, especially if you are holding a portfolio, I wouldn't begrudge anybody to buy long-dated VIX calls here just as a hedge, because again, we don't know what is, we can't call what happens in the market as it relates to an unforeseen credit event due to the high interest rate environment. Whatever, I guarantee you, if we do get a drop in the market, whatever drop we get is not going to be something that is apparent or obvious to us, right? Is going to be like 2008, where, yeah, a few fringe individuals did spot an error in mortgage-backed securities, mainly those that were, on the inside, looking at the credit rating system and how they were erroneously rating these subprime mortgage-backed securities as A plus credit when they weren't. But for most people, that was a surprise. And I think for most people, not only were the bank runs a surprise, which were backstopped by the Fed, but the next catastrophe, if we do see one, will definitely be unforeseen. It won't be something that's like, oh, see, yeah, we were looking at the housing market and that's exactly the bubble that popped. No, I do think that it will be something more nefarious, something more inconspicuous, and something that is more indicative of a black swan event, which is something that's not obvious. So again, I wouldn't begrudge anyone for buying VIX calls. I would likely be holding some VIX calls against my long-term portfolio here as well, especially since the VIX is really cheap and I can go out 6 months and just hold them and see what happens. And if we do get an unforeseen event, then I will at least make some money off of the VIX and use it as an insurance policy. Anyway, traders, if you want to sign up for the Academy to get all of my trades and analysis, what I present to you here, I talk about on a daily basis, along with the rest of the fellow analysts who do a great job in the Academy as well as the thousands of members where we talk up the markets and what's going on with the economy every single day. Link is in the description. Be sure to join. In my view, it is the most valuable community that you will find online because we're not just focused on trading options. For instance, we trade options, futures, stocks, long-term holds, hedges, market analysis. We do the trading mastermind Zoom calls. You also get access to 60 plus courses on how to day trade, how to trade options. We are releasing a futures course soon too as well. Let me know in the comment section what you think about the VIX, what you think about VIX manipulation. Was this something new to you? Did you know this before? Do you have even further details than what I shared? Would love to hear from you. Leave it in the comment section below. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.